Right, ladies and gentlemen, that gets us to the next session for the day, which is on the topic maintaining operational resilience in an environment of increasing dependence on the cloud, AI, and third party vendor. And this will be presented by Mr. Benjamin Anafi, the head of governance, risk, and compliance for Ali bin Ali. Just to quickly introduce Mr. Benjamin, he comes with over 15 years of experience in governance, risk, and compliance. Ben has worked with some of the world's largest banks and international organizations, including HSBC, Barclays, Bank of China, and Deloitte. In a variety of senior roles, Ben has led and managed teams implementing change programs in risk management, regulatory framework, regulatory policy, and control mapping and end-to-end build of compliance and AML control frameworks. In his capacity as an MLRO, Ben has expertise in all areas of financial crime, including risk assessment, system implementation, reporting, and strategy development at senior management level. As a strategic leader with a solution-focused approach, Ben has worked as a regulatory director in consulting, supporting CEOs, CROs, and CCOs, finding solutions to complex regulatory issues across payment services, fintech, wealth management, and conduct risk. A very warm welcome again, Mr. Benjamin, to the MENA AML and Fraud Conference. We would definitely look forward to your presentation today. Thank you.
Thank you very much. I believe you'll be sharing my slides if that's possible. You can go ahead.
Yes, just a moment. Just a moment, Mr. Benjamin. We are doing it.
Oh, thank you. Excellent. Thank you very much. Okay. Hello, everyone, and thank you for listening in. It's an honor to present to such a esteemed audience and take part in this two-day event. As Anil mentioned, I've had the benefit of working for a number of large banking corporations and some smaller ones as well, whilst working for a consultancy. What I'd say is that this has given me the benefit of really understanding the different governance, risk, and compliance journeys for these firms. And I think the interesting thing is that regardless of the geography, the firm size, or type of firm, there are consistent challenges that firms need to face. When we think about things in terms of the pace of change, the horizon scanning piece, keeping on top of all of those regulatory changes as they come according to what the regulators require, geopolitical and socio-economic challenges. Of course, what's happened between Ukraine and Russia caused a number of different sanctions, concerns, and questions to ask in terms of our risk assessments and how we look at customers from different regions. Brexit being a massive thing in the UK and Europe. And I think earlier in our presentations, we spoke about cross-border activity, expansion, and moving into different regions and all the challenges that come with that. And then, of course, over the last few years, that the pandemic has been a big factor in how we carry on providing our services to customers with as minimal disruption as possible. And I think alongside that, the intriguing thing that's come from that is the tech advancements that have been really catapulted during that period of time to enable us to provide these remote services. And that's probably the key thing that I want to speak to as time goes on throughout this presentation. And I think over the last 2 days, we've seen a lot of talk about what the space is for tech within financial services and financial crime prevention in particular. It's interesting to look at where we are and where we were from a banking perspective and the struggles and how that is going to be improved from that perspective. So with that in mind, I wanted to start off with some fairly provocative quotes, I'd say, from some former CEOs of major banks in the UK and Europe, which really detailed the tech challenge that banks have. Could we move to the next slide, please? Is that put? Thank you, brilliant. So the central one, it's pretty incredible that banks are still run like dinosaurs. Banks have tons and tons of data inside, but it's very difficult to get at. They've got systems that are not compatible with one another. I mean, this is, of course, very damning quotes from former CEOs of large banking corporations in Europe. But I think some of us that have been around long enough may sympathize with some of them. I could think of my times at some of the biggest banks, Barclays, HSBC, where you have huge legacy systems and frameworks and IT infrastructure that is really difficult to update, change, and work more effectively. You've got reams and reams of customer data, which could be utilized in a better way. And then on top of that, systems which aren't really speaking to each other. You could have a customer that is from a wealth management perspective, and he's already got personal banking products and so on. But when you're onboarding these customers, how well do the systems speak to each other? How good is that customer experience? And I think this is really the tech challenge that a lot of banks have faced. And it's interesting to see how some of the challenger banks have been able to take a lead because they're not encumbered by the previous systems. They can start from scratch and really embrace some of these tech advancements. If you can move to the next page, please. Next slide, please. So with that in mind, it's really intriguing to see how this has really moved forward in terms of AI, cloud computing, and all of the different RegTech offerings that are available on the market, both internally for your firms, but also externally if you're outsourcing those activities. I won't go through all of the virtues of these because I think we've had some fantastic presentations over the last 2 days really detailing all of that, and not least the last one. But of course, all of the key responsibilities from a financial crime controls point of view are covered by this, whether it's know your customer, PEP and sanctions screening, your enhanced due diligence, remote ID verifications, and of course your transaction monitoring. There's so many tech-powered tools to make this a better customer experience. And then on top of that, it's intriguing to see how that works outside of just fin crime. So if you're able to go to the next slide, the key thing that I'm trying to represent here is the fact that I think many people in this conference maybe wear a number of hats, looking after not only financial crime, but maybe governance, risk, and other areas of compliance as well. And just from this slide, I'm trying to really demonstrate the way that a lot of these RegTech powered tools are really embedded in the whole end-to-end process from our governance and risk and compliance perspective, whether it's horizon scanning, cybersecurity, regulatory reporting, trade surveillance, you name it. It's all powered by these tools. So with that in mind, this takes me to the key part of this presentation. What is it what's the challenges of firms adopting this and moving forward? I think we've heard quite a few of them today, some of them being around your overall operational resilience, which I'll get to. But on top of that, fears around costs, which is interesting because I think the whole thinking around these tech tools is that they will actually improve the automation, which will mean that there's less time taken doing mundane tasks, and hopefully on top of that, get things right first time with less inconsistencies and false matches. Again, that should drive down cost in that respect. The biggest question when using an external provider, and even getting someone externally to improve your internal systems, is the question of interoperability. Do we have the tools, and can it blend very well with your current systems, which is always the biggest struggle. But then I think the biggest worry is around operational resilience. If you're able to go to the next slide, please. So with operational resilience, this big worry is around the fact that if you use an outsourced provider, if you outsource your operational um, needs, you can do that, but you can't outsource your accountability or responsibilities. So, so with that, there's a big worry naturally for firms to make sure that you're happy with the providers that you're using. So overall, let's talk about operational resilience going forward. Obviously, with in mind the key tools that we use from a financial crime point of view, but as shown in the other slide, it impacts all areas of your business. And we want to really ensure that we're in a good place to manage these. So to think about operational resilience overall, probably the best place to start would be to think back to the financial crisis in 2007, actually, where, as we can recall, a number of mortgage-backed securities that were sold in the US as subprime assets began to default, and that had a disastrous ripple effect throughout our financial services system. And as a result of that, there's more regulation that followed. The Basel reforms, which were looking at your capital buffers, your liquidity, how much you had in reserve, and stress testing to ensure that you can manage these economic shocks when they do come. Fast forward towards present day now, and as we've heard and from a number of the speakers over the last couple of days, we're very much into a new phase of digitalization, big data, cloud computing, robotics, and the big challenges that come from that, ensuring that your operations are resilient. And that's the key challenge right now. So with that being said, operational resilience covers all areas of your non-financial risk, as you can see from the left-hand side of the slide. And the real premise around it is saying, okay, these disruptions are going to happen. You have to assume that they are going to happen. It's different from your usual risk management perspective, which whereby you usually look at things from the angle of, on one axis you've got your likelihood, and on another axis you have your impact, and then you probably have that measurement of saying, okay, this is highly likely, but it's low impact. It's highly likely, but it's low impact. But because it's likely, we're going to put resources there. Or something is a very high impact, but very unlikely to happen. So we'll push that project aside to resolve that. As I said, with operational resilience, you have to assume that these issues and faults to your major systems will happen, and you work backwards from there. The pandemic, sadly, is obviously an excellent example of something that seemed very highly unlikely, but extremely high impact, that could happen, and it did happen, and it was a good test to see how resilient we would be. Could you move to the next slide, please? So the main question, how do you remain resilient? This is split up into maybe three main columns. Looking at the first one is to identify your important business services. So for the sake of today's context, we could say that payment services and making sure that your end user customer gets their payments or can execute their payments or gets their salaries and payments on time is very important. You could talk about your transaction monitoring and screening tools, your PEP and sanction screening tools. So let's take those just to bring it to life a little bit. Let's say, for instance, your PEP and sanction screening tools, those systems went down and there was an issue with it. And like I said, this is hypothetical, but these things, we have to assume they will happen. How long will it take before that causes an intolerable harm to your end user customer? You could say, for instance, you're onboarding a new customer and it delayed that process by a day. Let's just say that, for instance, that's an issue, and let's say that's a day. But let's say, for instance, your transactions, you're partnered with HSBC or some other bigger bank, and your payment transactions are connected to their systems, and they have an issue on their end, which then means you have an issue with your system. And then it's a bank holiday or going towards Eid, and your customers need that money. They've made provisions, they made plans. How long can your systems survive? How long can your systems go down before that harm really impacts the customer? It could be an hour, it could be 4 hours. So the whole point is being able to really look at these key systems, whether they're internal or externally sourced or outsourced, and then understanding how difficult it would be if these disruptions happen, and then investing in your resilience to make sure they are where they should be. Could you go to the next slide, please? So just a little bit more about impact tolerance. As I said, it's really the maximum tolerable level of a disruption to your important business services. And this could be done looking at it from a time-based point of view, as I mentioned, or it could be from volume of transactions. But essentially, it's got to be really done in an intricate way, going through all of these areas across your firm and thoroughly understanding that. And it's got to need that input from a senior management level as well, because looking at these tech resources and your internal controls, it's no longer the reserve of somebody in the IT function or some systems architect in the corner. It's fully embedded in how we do business and make sure that our end users get the right quality of service. The next slide, please. So again, just a little bit more to really think about how we can calculate these impacts. From the left-hand side of the slide, you can see that you're looking at everything across your business, whether it's third-party providers, as I've stressed today, information and cybersecurity, product, change management, people, looking at all of these areas to understand the impact. And to the right-hand side of the slide, examples of measures of impact that can be the total numbers of trades completed, could be the volumes of transactions going through your systems, the number of customers and the types of customers impacted. There could be a bias towards customers that are retail as opposed to corporate banking because the impacts hit them in a different way, and a number of different things. Look at lost data, the fines that could be associated. I think a lot of our presenters spoke about the fact that if you get these things wrong, it can have huge regulatory consequences, which of course is our job to try to avoid, as well as the reputational damage. When a system goes down for a major bank or there's a massive customer impact, it loses confidence in your product. It loses confidence in the banking system and the markets as a whole. So again, this is something that we really want to do our best to manage appropriately. The next slide, please. So almost coming to the end, just the last couple of slides now. Scenario testing, something that I'm sure you're all familiar with. You want to create real scenarios in as much as they are likely, but also unlikely scenarios. But really you want to focus on the most important business services and the biggest disasters that could happen to them, and making sure you have enough investment in your resilience to make sure that these things can be managed appropriately, that you can respond well, that you're flexible, you're adaptable, and that's of vital importance. I think one of the intriguing things, we were talking about cross-border activity and expansion and a number of these things. These are all big picture business attributes. But with any business strategy, you also have an exit strategy, and that's an interesting part from this perspective. What if everybody is using a huge web-based provider, Amazon Web Services, or some other huge organization, and they have an issue? You've done your due diligence, you think it's a great provider, and it certainly is, but how quickly could you move to another provider for your tools? How quickly? What backups do you have for your sanctions screening tools, your transaction monitoring tools? How can you make sure that you can move on if there is issues in that respect? And next slide, please. This is just really just to sum up at this point now, just to say that this is not a one-off activity. It's not just a matter of due diligence on your providers or any sort of any vendor that is helping you with your firm. It's an ongoing cycle to make sure you get things right. As I said, just to sum up, starting off with identifying business services and mapping dependencies, determine your important and set the impact tolerances for these important business areas, establishing recovery plans, governance and reporting, self-assessments. It's a full cycle that has to continue, just the same way that you do your ongoing due diligence, your ongoing monitoring. You have to, on an ongoing basis, be sure and comfortable that you're happy with the providers that you have and the systems that you have. And just the last slide, please. I think that's the last slide, and just closing. So thank you very much for your time. Hopefully that was a useful presentation, which I'm hoping that it can wrap things up in terms of the tools that we have. And my details are there. Hopefully we can stay in contact at some point and answer any questions. So thanks again.
Thanks a lot, Mr. Benjamin. As we inch closer to the closure of the event, you really summed it up, everything in a nutshell. Thank you so much for that. And I appreciate your support for the event, considering you also shared your inputs with respect to the panel discussion and, of course, your individual presentation as well. Thank you so much for your presentation. Have a nice day.
You too. Thank you.